don't make the mistake that has been ingrained in some of you guys for so long, which is conventional loans are always better than FHA loans, meaning you have a stronger buyer every time if it's a conventional loan versus an FHA loan. That couldn't be further from the truth. So I'm gonna break it down to you guys very simply. So yes, typically people that are going with a conventional loan have higher credit scores. But one of the biggest misconceptions is that they're a better altogether buyer, because in many cases they're not. Case in point, FHA loans, when compared to conventional loan, people always think, you know what, because they're doing a 5% down conventional loan, they're way better off than that 3.5% down FHA loan. And that's not always the case, specifically relating to the debt to income ratio. And I see this happen so often. Now, a conventional loan will typically allow somebody to go up to about a 50% debt ratio. What that means is if I make $6,000 a month, my total debt, including my new mortgage payment, cannot exceed $3,000. 3,000 compared to 6,000 is 50% debt ratio. Now, on an FHA loan, yes, you can go as high as 56%. But where I see this so often happen is I see a conventional offer at 5% down with a 700 credit score and a 47% debt ratio. And another offer right at the same time where it's a 3.5% down FHA loan, and this buyer also has a 680 credit score, but their debt ratio is only 31%. Well, this person has a lot more bandwidth left in their available debt usage to allow for, you know what, maybe the insurance comes in a little bit higher. Or you know what, maybe there's an unexpected cost that comes up that changes their monthly payment in either one of these scenarios. And with that conventional loan at 47% debt ratio, we have a very little margin before they're out of being able to qualify. Where there's FHA buyer, they have a much lower debt to income ratio, and therefore they have a lot more room that if the income gets cut a little bit, or we can't use over all the overtime, that they're a much better certain borrower, and maybe they're just going FHA because they don't have the 5% down because they're a first-time buyer and they're doing their best to save their money, and so they need to go with that FHA program. So don't make the discriminating fact of always thinking that an FHA buyer is worse than a conventional buyer. Do your facts, ask for a DU, look at the actual debt to income ratios, and then make the determination from there.